Hey everybody, Daytraderrockstar here, and a high probability watch list for Stocktober, I should say, Rocktober. Come on. Um, it's going to be hard for me to get used to that. Stocktober 9th. Stocktober 9th. This month we're actually doing a little, once a year we do a little promotion where we have an open house. We haven't really advertised it too much. But it's just out there. So I might make this watch list an open house watch list, so other people might be getting it who are on the open house. That will change. That will probably go back to regular members only watch list next week. And but it's all good because it all makes money, right? It all makes money. Now, the first thing I want to start talking about today, we have a technique that makes us money each day. That's our job. That's our business. We're traders, and we have to go into a job every day looking for certain things. Well, at least that's the way I take the approach to market as a business, and I try to pass that on to everyone. The importance of having that discipline and the patience and a trading plan. A business plan. Understanding what gets you where and how to advance in the business and how to make profits. There's a lot to go in here. You just can't get in the markets and just trade. There's a lot of consequences to be had, and even talking about taxes. Taxes in itself. Being able to, when you're trading, and sometimes you're trading with this account, you don't realize it's almost a virtual money. You're not seeing it. You're just pushing a button. You're owning thousands of dollars worth of securities, and then you're selling it, and it doesn't have that real feel to it. So you could get carried away with losses and stuff, or even with gains, and then have losses. But you still got to pay those capital gains on those wins, even if you do lose them. So you have to. You have to just always have everything. Everything needs to be planned out for you. So I do some planning. I've developed a HPS methodology, which is my business plan. It keeps me inside of a set criteria for my entries and my exits, and understanding everything. Every week, every day I trade, I try to tighten up that. I don't want to get too tight that I'm missing everything, but I want it tight enough that it prevents me from doing stupid stuff. And stupid stuff is just trading when you shouldn't be trading. So, here we have today, again, two ways of making money here. Two ways of making money in my business plan. First, of course, I'm always searching for those divergences on the futures chart. Now, that's the fast cash. You can find a lot of good setups during the day. Maybe 4 or 5, maybe even more. And if you identify those and take those, you should do fine. It's the time around there, or the misunderstanding of the criteria exactly, that will get you in trouble. But that's a goal. That if you stuck to that plan, a boring route it would be, but you would make money. The other part is the stocks. We pay attention to stocks, and with that, I do the HPS watch list. Now, the HPS watch list basically follows the same criteria as the futures trading, but on a larger time frame. So we look for these same momentum shifts, pivots, recognizable patterns, everything we look for on the 1, 3, 5 minute time frame. We also look on the 60 daily, weekly time frame, and that's identified for you and all set up for you every week on the HPS watch list, which I trade off of myself. I usually end up taking these setups. So it's, and again, we're going to go over these setups right now, being part of the watch list. But there is two things that we do. We make money short term on scalping the futures or individual stocks, as long as they fall into into our methodology. And the other one is the HBS swing plays, and these are typically swing plays. 3 to 5 days would be perfect, but of course, as there's no time limit on this, but that's, originally when we try to get these setups, they usually move within the 5-day period, and we have a bigger than average move based on the divergence or on the technique, and you'll see those. So we're going to go over those first, just kind of keep you up to date on this. You could actually see there's Philip Morris, Avalon Bay, Sienna, American Airlines, or Alaska Airlines, KHC, all active. We also have Kellogg still active. And these other ones have hit their targets. You know, some of them we've traded, some of them we're still in. Actually, I'm going to go back and I'm going to start off talking a little bit about these divergences we search out on the futures charts. In this case, the ES is on the screen, but we look at the NQ and the YM. You could apply the techniques to a lot of individual trading vehicles, be it crude oil or anything you want. So right now we're looking at the ES, and this is today's chart. We actually had a kind of a down day. We had the jobs report out, came out underneath the expectations, but that was kind of expected. So it wasn't putting too much into that. It's a Friday. We are kind of grinding down, but it was a nice pattern. It's something that you'd recognize as a nice falling wedge pattern. And we had a divergence over here. And this is, you know, what we call a kind of a running divergence, where we have that original spike low. We're holding that low, but the stochastics here are holding off of that low, or back above the 20 line, and we're holding that. It did pop. It popped up here, back up to the pivot area. At that point, I put this new trend line in, and I've just been following. Haven't taken any trades on this today, just because I got a late start and I was working on research. But what we did do this week, we did a lot of good stuff this week. You know, we tried to identify a lot of these. I'm just going to go back fast and just kind of show you some of the setups that either we identified, and just understand that that criteria has to be met exactly. You know, that's how I would do it. You know, if you were trying to think of a good analogy, but anything, if you're going to be good at something, you have to do it the right way. You know, there's probably a scientific approach to a lot of things, and you know, you could calculate it down in probabilities, and you know, having the best probability is probably something you want to always have on your side. So these techniques, you know, lead to that, and it might not be a lot. And this is where, you know, a little experience, a little guidance helps out a lot. So in this case, we're just going back. I'm just going back minute by minute, and this is going to be on the minute chart. And remember, even if we see a micro kind of divergence where you had that initial high, we're going to call that second high right there as a high. And we came back down and we tested that high, but we failed underneath that 80 line. But look how small it was right there. It was very tiny in a way that, you know, probably would not even really see it too well. It wasn't a good one. The market had some weird strength to it. But fact is, it was a divergence. The fact is, from that point on, we kind of drifted here. Just a small amount. And that's relative to what type of market you're having. So you might still get sell signals in a very strong market, but those sell signals will give you really good opportunities, but the best opportunities in a limited selection of, you know, a pullback. You're not going to be at a pullback on a day like this, so you are going to get, you know, and you have to understand that. Like, wow, I caught the top, I'm going to take this, but it only gives you a half a point, and you're like, you know, I'm not getting. Well, that's what you have to take on a day like this. So we just continue to just kind of rotate back there, and I think there was one here. That was a decent one too, and this is something I see over and over again. We have this rising channel. This is from I think this is from Thursday. We had this rising channel. This is we actually broke out to the upside, but as we rise up here, you know, every opportunity to look for a developing pattern is, you know, I want to always do that. So right away, I'm starting to notice that we have this rising channel. The pullback here is defined by a divergence. Remember, it has to fit that criteria, and from that point on, we did get a little pullback. And then we noticed that we were pretty much, even a little choppy there, but pretty much embedded up here on the slow stochastic, meaning that the upper trend is strong. So that's a little experience that comes into the trading there, and it teaches you a little bit more about follow-through and direction. And then right here, a decent enough divergence, but again, a very strong market. But you do get a drop that's significant in a way that you could actually say, yeah, I dropped underneath this small channel line. We moved down here, but not much, you know. And again, the rule is you take the divergence trade, and you tend to take it off or understand that's your first profit opportunity is when those stochastics on that time frame has rotated back under the 20 in the case here of a, in case of a short. And then you have a better chance of a bounce, and that's exactly what happened as a bounce. So, lots of times you'll get a lot more than this. This wasn't that much. Maybe it was a point, 2 points. But remember, all we're looking at sometimes is 3 ticks on ES. So we're giving ourselves the opportunity to get the meat, the meat in the middle of the move. But again, it's all about recognizing, hey, that's the only time that the quality that qualified, and I should have took it off. It keeps you out of trouble. It gives you a better opportunity to gain, get some scratch, even if it's just a little meat, but it works constantly. And this is a very, not a great example of what you can get out of a signal. I mean, these tend to, divergences tend to give us the best signals of the day. And if there's not much of a day other than a grind higher, you still will get those best things, but they won't. There's nothing to compare them to. Like, this is better than that pullback and that. Anyway, you know what I'm going with that one. So these are all working out. The issue is being here in front of it and recognizing it while it's happening. Now, I have some alerts in the room that go out that we have the RAM bot, and we're always constantly scanning them. This one might have been this was a good 14.3 divergence. You could see the spike higher, and then we can see that dotted line still above that second stage. And again, it's very, but that is really nice. When we had that nice candle pull back and another nice candle, it left a little tail up there, but we have that divergence. That gave us a decent pullback. I mean, a decent enough pullback to profit on a scalp. Remember, this is a scalping technique. This is strictly a scalping technique, but that gave you some, that gave you something there. And again, imagine applying this across the board. You apply it on the NASDAQ, you apply it on the YM, you apply it on the, and you could even apply it on some other things that we're going to be talking about in future videos. I've been studying the Bitcoin trade just over the last 2 evenings, and I'm starting to find something that's working with it. So I'm going to do a little bit more study on that and then come back to you and give you my report on that. The other thing here is another obvious divergence, and sometimes these divergences are all over the place. You just have to, get used to them. Here we have that double bottom. We have a low here. It's actually a triple bottom. Well, you know what? We're not even going to say. We had this low here, and it's, all right, this is where it actually happens. Right here. At the end of this channel, we actually had a low here underneath that 20 line, right? Remember, I'm just breaking this down in the most simplest form, and many people on this, getting the video here are familiar with this, and this is what they know, and this is what I'm teaching. But there's new people out there sometimes that like to stress how important it is to recognize it and keep it within, the criteria. The criteria is important. Believe me, that's a big difference. Upsetting the formula just a little. So here you have a low, a lower low, a higher low. And from that point on, you're actually moving higher. And typically, in this scenario also, because it's already defined for you, whenever you have a divergence trade, your bracket's going to go in, or any way you're going to trade it, you're going to put your stop in a tick underneath the divergence low. So if this is the low, you're going to put that tick down, that stop down there. In this case, you can actually see rotated back up, came back to the bottom, didn't really hit the didn't low tick that, and then continued to push higher. You can even give yourself a little bit more, leeway if you wanted to. It doesn't have to be a thing. But so you have a divergence there, you have a divergence there, you have a flag here with strength, you have divergence here, and this is all happening in the first, So these are the areas. I mean, if you are a hyper scalper, there's no doubt this is, this could be done. I prefer bigger moves, not the aggressive trending day, because I find those are harder. If you start to try to short a market and it's not meant to be shorted, but you're getting the signals, it could be dangerous. You'll be fighting that tide, and that's not the easiest thing in the world to do. Here we had another divergence right here, it looks like. So 220 the day before, marked it off a low, double bottom low, higher low, and look at that nice move. And that nice move gave us another textbook move, which we call a triple stochastic flag setup. So now in our business plan, we've had divergences on the futures, on any of the futures. Divergences, as long as they, fit the criteria. HPS setups on the stocks. All right. And then you have this triple stochastic flag setup, and and that's probably the second go-to setup I like to go for. Other than the divergence, you usually get a breakout, and you'll see this easy. Again, the criteria is all lined up for you. The only thing it has to do is everything has to apply. You have to have that price holding above the 20-period moving average, which is the green line on the 1-minute time frame. The 44 to 60, more important is the 60, should be above 80. All right, and as that holds above 80, the rotation, the fast stochastic back here rotates back down to 20. As that is all happening, this stays above 20. The price holds above the 20-period moving average. If you see that, the odds of a move forward are great. Now, again, I would say up there in the high 80s, 90% range, but again, it's all relative to what you're trading and what type of market it is. You'll get that little pop, but it might not be enough for you if you don't get a good entry or you don't get a good exit. So you can see we did get a nice little pop, brought us overbought, and then everything here is relative to that time frame. Once we got up there was a better chance of a pullback. So it happened. It happened like it was supposed to. This happened, this happened, this happened. So everything here that we pay attention to, there's not many of them. 3, maybe you want to just take 3 setups you put in your business plan. This is the way I approach things. I'm not saying this is the law to do it, but this is what works for me. If something works for you, kind of locks you into that. Everyone has a different personality type. Some people might be able to just be able to mentally, take these setups and not have a plan behind it. Here we have looks like a divergence here. You can see I was trying to measure it out and a pullback, but then again we measured out a triple stochastic flag setup, and then it kind of moved back up. Again, not the best example on this day because it's such a trendy market, but as you zoom out, then you see that flag really did work out well. That triple stochastic flag did work out well. It's really about zooming out. Here's your flag. There's your move higher overall. See if we could get this going down a little bit further. Got a couple more days here. I don't want to spend too much time on it. I think you got the gist of this, right? I think that's the important thing, is understand their opportunities are out there. You have to be at the top of your game to recognize them, to execute them, and not get caught up in all the other crap that happens. Here's a nice divergence. Marked it out 10 o'clock, 10:30, anywhere between 9:30, 10:30. Great chance for big divergences. Usually those are the divergences that make major pivots of the day, where they change from positive or negative on the day. In this case, you can actually see there was a divergence here. It did pop back up. It came back down here. And when I see this, and again, this comes over time, and I teach it, don't forget there is a great divergence course out there I teach on the School of Stock. It has all this stuff broken down to lessons. Little plug there.
ES Tradeometer overbought.
And I'm always adding lessons to it. So when I see this kind of a range going from 10:30 to 11:15, I start to make sure I check the different time frames, like the 3-minute, 5-minute ends up, even though this wasn't this was a 1 minute here, it worked good. But now that we have a lower low and a low over here, this will probably set up better on a 5-minute or 3-minute. So let me just, what I'll do is I'll just constantly take a look there. Here's the 3-minute. There, it's a 3-minute, and yes, as I as I expected it. The hunter is, here you have your low on your 3 minutes, just tagging that line. Either way, it doesn't have to be under that 20 because it's actually stronger if it's above it. So you have this low here, represent this line right here, and this low right here. It's right on that 20 line. Then we kind of move sideways a little and then dip lower. But this low here, where it dipped lower, is way above this low here, where we started off low. So we have that divergence. And from that point on, it was off to the races. So, another good example. And I love just looking at the examples and trying to find something that didn't work. That's the tough part. Now they start to pop out at you. They happen so quickly. You have to be on top of it. That makes me more inspired to get to the markets and just look for those. And I think that Rambot helps a lot. I'll be sitting here in the office, and I'll hear the Rambot, or I'll be at lunch and I'll get the text that there's a 5-minute divergence. So I usually tend to come back and check that, and sure enough, the market makes a decent move off of that. So if you're just chilling in your crib, living the lifestyle of the rich and famous, and you hear that Rambot get up, there might be a money opportunity there. I think that's a kind of a hidden gem of that. Here we have the market here. Look at this. I think we actually had some interesting levels here. Look at this. Well, of course, this is what I'm doing every day. So, yeah, we had a decent divergence right here. Very decent one. It was such a strong one, we never saw that pivot come back. It was a low here, and then we had a double bottom low, but it never even turned back down. We recognized that real fast. I think this is one that we took, and that just took off. All right, so that was a perfect divergence. Looking around, this is actually on the 3-minute time frame, so that's interesting. Also, let's go back to that 1-minute time frame. And I apologize putting a lot of time in on the ES today as the HPS watch list portion of the section. And yeah, it was a 1-minute time frame divergence too. So look at this great divergence. It was also off of that trend line, but that's a really nice one. I mean, you see it across the 9-3 to 14, even these down here, and it was a really impressive move. And then trying to see if there is one here. It didn't really get back above that 20 line. I want to see that 20 line underneath that, that line. I want to see a definite thing. That's going to give us a better setup. This was a tradeometer buy signal. You'll see other symbols on the chart. The blues are the tradeometer signals. Here we have another example of a triple stochastic flag setup identified during the day and off to the races. Here we identify, looks like maybe a little divergence here. Can't see it as, no, I'm not seeing that. It actually touched that, no, it's over 80 here. You could actually overlay it. Was there one here? I think we're just measuring them out. Another triple stochastic flag setup. But again, another bullish, very bullish market. Not really seeing too much on those. And again, the key is understand the direction. If you don't want to fight the market like this. Here, 4 o'clock to 5 o'clock, about an hour in between. You got a low here and a low here. You might not see it on the 1 minute here, but if you go to the bigger time frames, there might actually be something showing up. And again, these are all active up from 3 o'clock on. 3 o'clock in the morning on, you're good to go. So you are seeing a slight divergence here. Barely. Let's try the 5 minute. All right. Zoom in there a little. Yeah, that's where I was looking at. You can see I have the yellow line down here. So there was a little 5-minute divergence on this pullback. Harder one to read into. And again, this is the overnight trade too. So this is going back out to past levels. So this we went through the whole week, and you can see 99, I think, % of the divergences worked in your direction. The key is your entry time and your exit. And getting through that, do I want to hold on to it longer than the first rotation happens on the stochastics? All right, you gotta ask yourself that, because that's when things start to get hairy sometimes. All right, so let's do the HPS watch list now, based on the stocks and based on a lot of these techniques, and see what is coming up here. We're in a few of these right now, so we're going to start off reviewing those. I want to bring the I'll bring the screen up to the HPS watch list here for a second. And also, before I forget, if you're getting the first part of the video, not the second part is members only. And if you're interested in trying out the open house, click on the link down in the description on the video, or anywhere on the, however you're getting this video. There should be a link for the open house, and then you sign up. You have to sign up, put your email in, we'll send you a username and password, and it'll be active during the open house. Alright? So now let's start off the HPS watch list.